Welcome back to the podcast. I've got Dan Blackwell with me. Dan is a commercial broker focused only on multifamily investments with CBRE. He's got over $1 billion in sales since 2015. Dan, how you doing, brother?
I'm doing good, Byron. How you been?
Doing amazing. So, everyone that doesn't know you or doesn't follow you on Instagram, I mean, to me, in terms of multifamily brokers, you're the best follow on Instagram. Your videos are fantastic. Sometimes I'll just randomly DM you and I'm like, dude, do more video, more video. They're unbelievable. They're educational. You've got a great delivery. But just give us your background and all of that.
Yeah, thanks for having me first off. And I specialize in the sale of apartment buildings here in Southern California. I run a team of 12 in multifamily professionals within the marketplace. We cover the entire market, and we really represent high net worth investors who are acquiring multifamily real estate. And about 3 years ago, I started to document the journey and put myself out there on social and just share with what we're going through. So that's kind of the start of it. And we've just been able to grow. And that's how me and you met. We met through Tom Ferry, and Tom has been an amazing help with getting us to put ourselves out there and push. And we're on all the platforms now, all the channels, YouTube, Instagram, LinkedIn, just to make sure that people are aware of what we're up to.
How did you meet Tom? Just being somebody in the community in Orange County, and or was he investing, or like how did you guys cross paths originally?
That's a good one. I was following him and I was watching his stories, and I think this was probably about 4 years ago. He mentioned units and that how he was an investor in units. And I reached out to him, and I just figured he might be an investor because he was at the time located here in Orange County.
That's right.
So I reached out to him and set a meeting with him. It took some time to get in front of the guy, but was able to get in front of him. And then it blossomed more into, an opportunity to collaborate on the coaching level than direct investments. But there were so many dots to connect with him. We've talked about doing deals together, but it was really from the investment side of things. We have aligned interests there. I just wanted to lend a hand and help. And obviously the guy's 15 steps ahead of me, or a lot of folks right within the industry. And we were so archaic. We just said, man, we got to get digital. We got to get on video. So I immediately begged him to coach me.
For agents listening, how many reach out attempts, how many follow-ups did it take to get in front of Tom Ferry?
Ooh, I would say probably 8.
8. So I would have guessed 10 plus. So he gave it to you on number 8. That's pretty good.
Yeah. I got him at the right time. It might now be, he might not meet with me now if I was starting all over. I mean, he's so busy. The guy's just, I slid in the DMs.
But it's all about the follow-up. You caught him at the right time. 1 through 7 wasn't the right time for him for whatever reason, travel, speaking, just too busy to take a look at that message. And then when he had a moment, you caught him. And that's why average reach out attempts is so important. Whether you're in commercial real estate, residential real estate, it's all about the follow-up. Tom says that all the time.
Yeah. I read in a sales book back in the day when I was first getting started, it took 6 to 8 times to get a yes. So I just said, well, why fall short? We're going through 1 to 3. Most of the time you don't want to keep following up after that. You're figuring you're dealing with like somebody who's not interested, but you never know their timing, what's going on. So yeah, definitely 6 to 8 attempts before you can get a first appointment is what I've always stuck to my head.
So I just saw this video because I mentioned at the top here, you're like killing it on video for anybody that's a commercial broker. You're one of maybe a handful of people that's even using Instagram, from a commercial brokerage standpoint. But you just put out this video that was breaking down the return on renovations. So how does someone who's investing in real estate break down a return on their renovations?
Well, the first thing that I look at is, what can I get in rent? What's the market willing to pay for that unit? So I survey the market. And for example, a unit that I was turning here that I documented the video on, the market rent was $3,250. So my current rent was $2,250. So I could get $1,000 lift. That current rent was a little low, but the market had just shot up. The rental rates had shot up. So I said, okay, I can get $1,000 more in rent if I renovate this unit. How much is it going to cost to renovate the unit. And then I kind of backed into it to look at dividing the cost, the increase in rent over the cost to get a return on cost. And so if your return on cost is 5 years or 4 years or even less than that, then that's a no brainer to spend the money and get the unit to market. So that was kind of how I broke it down and made the decision to push forward.
On that video, you renovated for a cost of $45,000. If I remember correctly, it came out to 27% return based on that 12,000 that you're picking up on the year.
Right. Right. And so that's a great return. Approximately a little less than 4 years, I get my money back. So it'd be great if one tenant moved in and stayed there 4 years, then that would be pretty seamless. But 4 years return on cost is a good move. Now that $45,000 turn, and that's a ton of money to turn one unit. I mean, we're turning other units half that cost, but they're a lot less of an upgrade. It just depends on the submarket you're in. But $45,000 is a lot of money. I mean, I was like, good Lord. I mean, I'm spending that much money, but the percentage was there to do the deal and to make the spend. And now we're spending 55,000 a turn instead of 45 with costs running. And we're hoping to get in the low 20s on return on cost. So,
well, what I loved about that video is you didn't HGTV us. You actually showed what everything you did cost, labor, material. You broke the whole thing down, where HGTV would just say, like 3 costs, and there's things missing and the cost is like not calculated correctly.
exactly. And what was nice about it is, look, I don't have all the best vendors. I don't have all the best pricing. I put that out there, and there was people within the community on Instagram that were DMing me and saying, "Hey, I can get that done cheaper," or you overpaid on your AC guy, or you got a good deal on the AC, whatever it was. But
So you're meeting new vendors right now because of that video?
Yes.
Nice.
And there's also investors out there that might have a little bit more dialed in reno turn than I do. And I'm just putting it out there. I'm not trying to, it is what it is. So
Yeah.
some of those investors are saying, "Hey, use this guy." They're hoping that I give them some deal flow, which I'm going to do. We'll push deal flow out, and they're sharing their vendors, and we're kind of, helping each other. So it's
Working
been
together.
great.
Now, that was your deal, this
Yes.
particular. Yeah. So you're on a path to get 100 doors in Orange County, right?
Yes.
So how are you going to pull that off? How are you going to get 100 doors, and by when in Orange County?
I would say the most aggressive plan would be within 24 months to get 100 doors. I'm on 16 doors that I own on my own, 100% of. So I'd have to buy, what is that, 84 more units within 2 years. That'd probably be the most aggressive. I think realistically, it might take 48 months, 4 years to get there. And there's really only 3 ways to do it. I've got to generate more cash from my brokerage business to put into investments, which you can only broker so much and earn so much. So that's one bucket. I can't do it all through that form. I've got to either 1031 exchange the units I'm in and move them up into more doors. And that would be the most logical way to do it, or do cash out refinances and buy more real estate that way. So some combination of cash out refi and buy, or 1031 exchanging up.
You're not taking any hard money.
No, I haven't done that
Why?
yet.
Walk me through why.
Um,
Why would you not take hard money, and then if it's a good deal, refi out?
yeah, I could. I could. And look, it's crossed my mind. We've got a great lender here that can do bridge product. It's kind of like a hybrid hard money. It's costing us 7% interest only, no prepay, with 1 point of loan points. And you can get up to 75% LTV. So that's something that I definitely could do. I've just been a little careful, and I've always tried to get great killer financing that's conventional and not, go super, super aggressive on, because what if we hit the wrong side of a cycle and then I can't cash out that hard money? So I've just been careful. But yeah, if there's some no brainer deal and I got to go for it, then I'm going to go for it. I'm going to call the hard money guy. I'm going to call the bridge guy and just do it.
You'll make the deal work.
Yeah.
Are you taking investors on your down payments? Or are you doing these all? These are 100 doors on your name.
100 doors on my name. So I've got other partnerships that I've formed where I found a great deal and I needed the money guy to come in. And I've got like 5 or 6 partnership deals that we have, and that's not counting the 16 units. So this is just 100 doors, documenting the journey, going for it.
Yeah, you guys got to follow Dan on IG because he will document every step of the way. And if you're, even if you're a residential agent, you know you get people that come to you looking for a 2 unit, a 4 unit building at some point in the year. And just by following Dan's Instagram, you're going to learn a whole bunch about multifamily investing and how to value these properties. We'll get into that in just a second. Like, how should someone that doesn't have a ton of experience like you focus on selling multifamily deal? Obviously, bigger unit numbers than 2 and 4 units. I get that. But I do. Well, let's just get into it now, and then I'll ask you about the 1031.
Yeah.
If you're a residential agent
Yep.
and you want to help somebody, get a true value on a 4 unit building, what's the best steps to follow to do that?
To get into a 4 unit building, best steps. I mean,
But no, you got a beginner investor. Okay, so you've got a residential agent, beginner investor. How to help them put a value on the property?
I would say, I would look at comps. I would
So
definitely look at
comps number
comps.
one.
Yeah, I would look at comps and just see what's up. I would look at per foot, per unit. Those are kind of the two. I wouldn't get all caught up in like cap rates because most residential agents candidly are underwriting to the true cap rate. So I would look at price per unit, price per foot, and then I would do times gross. So those are the 3 metrics I would look at. And then you can start
Walk
looking at
us
a,
through times gross.
yeah. So basically it's your annual rents divided by your purchase price. So let's just say your building's getting $100,000 in income per year and it's worth 2 million and they're asking $2 million, right? So you would just divide that out, simple math, that's 20 times gross. Yep. Right? As a buyer, you want to pay the least amount of times gross as possible. As a seller, you want to get the highest times gross as much as possible. But it depends on where you are in America. 20 times gross is really high, right? That's really crazy high. But that's kind of how it is here in parts of Orange County and coastal Orange County. It's 20 times gross. So let's say you're buying in Orange County and you look at a bunch of comps and they're all 20 times gross, then you see a deal that's 18 times gross and it's in a great location and you feel like the price is pretty fair, then jump on that one, or at least go drive by and look at that deal. You get a barometer of per foot, per door times gross, and you can kind of back into this feels about right. You got to get a sense of the market. So that's how I would, coming into a new market or coming into something new, that's what I would be looking at.
Comps, price per foot, and then times gross.
Yeah.
Yeah.
I would just be looking at those.
What if the investor comes and says, "Hey, Dan, I'm buying this 4 unit building and I want to be at, a 10% return on my money"?
Yeah, you could do that too. A lot of the times
you can back into it that way.
You can back into it that way too. You can't get 10% here or in my little part of the world. But I would say if somebody were to answer that, no matter where you are, if they're like, I'm looking to hit a specific return on my money, then I would probably manage their expectations to, you might not hit that day one, like close this deal and immediately next month you're getting, your number that you need, your cash flow percentage. It might be year 2 or year 3. We got to get the rents up. We got to turn a unit. So I think it's managing the expectations to a buyer to accept the fact that they might have to wait 12, 24 months.
And show them that plan when they can cross over into their desired return.
Exactly. Because if they're a new investor, I'm going off, what you're saying. I mean, a lot of times it's agent managing the buyer's expectations of what's reality. And they need you to, because sometimes they have their own expectations. And if they were stuck in their ways, they wouldn't transact. So they need an agent. You're actually helping them. Of course you are, but you're actually helping them get on title and own a deal when it's, just with experience. Like you come across a nice Plex and you're like, yeah, this number is a little off and yeah, it's a little higher, but this is like bullseye location. These rarely come up. I've watched the market for X amount of months. Like this is one you might be willing, you should probably consider accepting a less of a return. So that's what I've done to kind of help people get where they need to be instead of
Uh,
trying to be a hero and get them everything they want. And it's, you put so much stress on yourself to make that happen. And you can only transact on what the market delivers you. So you have to know as an agent, is this a unique property? Is this one worth buying?
a lot of your clients at this point, they're buying big deals, right? Like, what are some of the biggest deals you've put together in the last couple of years?
Oh, we did a 52 unit building in Huntington Beach for a little over 20 million bucks. And the investor that acquired that property started with a fourplex about 25 years ago.
Wow.
Literally a fourplex, was an engineer, bought a little 4 unit, and just started 1031 exchanging up and up and up and up and up. And then got to a place where he said, okay, I've got some units now, 30, 40 unit buildings. I'm not going to keep selling. I'm just going to cash out refi and start buying more. So it's a pretty cool story. I want to get him on the channel
Yeah, you
and
got to.
interview him. But
I mean,
yeah,
so this
20,
dude's become a big time investor. When he bought this, how many units was the $20 million deal? 50, you said?
52, yeah, in Huntington Beach.
52 unit. When he bought this 52 unit $20 million deal, did he come with his own numbers, or was he relying on double checking with you on, what the value is in this property?
He double checks with me. It's just in his nature. He likes to double check. He knows what he's going to do, but I think he always wants to get a good sense of perspective. Me and him have a really good relationship. I've sold him probably about 20 buildings, and we had the talk. I mean, it was more than what he wanted to pay. It's a lot of the times it's going to be more than what you want to pay. But we looked at it like, look, you're selling some smaller assets, you're selling high, you're buying high, so that works, and you're getting phenomenal financing. We got top 3 banks in the marketplace to compete. They all wanted to finance the deal, so we got a smoking loan. And once we did the deal, the rental market kept going. And this was probably about 5, 6 months ago since we did the deal. And he's happy as a clam.
Yeah. So, I mean, this guy 1031 tax exchanged up. For everyone listening that hasn't put together a 1031, walk us through the 1031 tax exchange. Two, did you see any of your clients start to squirm or make moves when the new administration floated out doing away with the 1031 tax exchange? And three, do you see changes in the future coming?
Yeah. So there's definitely investors. We all kind of squirm a little bit and get a little uncomfortable when they start talking about doing away with the 1031 exchange. And I've been in the business for 15 years so far. They've talked about doing away with the 1031 at a few different occasions, right? The first time I heard it, I freaked out. I was like, ah. But this last go around, I didn't really freak out because, and maybe I should have, but I didn't really freak out because it's been talked about before, and it
Yeah.
would just be devastating to the industry. It could happen. Anything could happen. It could happen, but I just didn't think it was going to be very likely. There was a lot of investors that were uncomfortable about it. And what it did was it fast forwarded a lot of investors to do exchanges then at the time versus waiting 24 months. And then there's
You,
uncertainty out there in the
you
future,
did
right?
see an increase initially of people going and moving on their exchange.
Oh my gosh. We were just crazy busy, just everybody
On
had
a
an
basic level, just in case somebody is listening, is like, I don't even know what they're talking about. 1031, explain it.
1031 exchange is basically, in my way of thinking, it's like the biggest and best real estate loophole there is. It's 100% legal, obviously, but what you can do is you can defer your capital gain on a sale. So what you could do is, say you bought a little fourplex and you put $250,000 down on the fourplex. You owned it, let's say, for 2 years, and now your equity's gone up and you have $500,000 in equity in that fourplex, and you want to sell it and go buy an 8 unit building. Well, you could sell your building instead of paying tax on the $500,000 or 250 gain that you would have out of the $500,000, you call your CPA and say, how much am I going to pay in tax? And they're going to tell you, and it's going to whack, a good portion of that gain, right? Well, what
You're
you
not
could
going to want to
do,
sell anymore.
you're not going to want to sell, right? Exactly. So what you could do is you can put your money with a 1031 exchange accommodator. You can't touch the funds when you go to sell. It has to go to a third party intermediary, which is a 1031 exchange accommodator. So when you close escrow, the money goes to the accommodator. They hold your funds. You place another property under contract. That money gets wired to that new contract, that new escrow. And that's basically deferring any gain. You defer your capital gains and roll it into the next deal. So you can go buy the 8 unit. You don't have to pay any tax. You defer the tax. So it's a great way to build and grow your wealth without getting taxed. You just keep letting your money ride. And then you can do an exchange after that and after that and after that and keep going. So there's things you have to follow. There's timelines. There's debt that you have to replace. You got to defer. You don't have to refer all the money. If you whatever you defer, it's not taxable. But some people, there's a bunch of ways to split it. You could exchange some money and then pay tax on some. And there's a bunch of great ways to kind of work through the 1031. But there's a ton of YouTube videos out there specifically going through it. But I'm telling you, you got to know the 1031 exchange if you're getting in the investment arena, because you got to educate your clients and guide them through the process. It's a great way to make money.
And you're typically, like you said, rolling into a bigger deal that's going to have bigger cash flow for you on the other side.
Exactly. I mean, it all makes sense on paper. Well, why doesn't everybody do that? Why don't you just keep trading? Well, there's risk. What do I buy? That's the hard part. I'd love to do an exchange, but where's my up leg? What do I buy? Right. And that's a whole nother dynamic. But
and
yes,
you have a time frame that you have to buy in. So you're up against the gun.
you are. And, I think the biggest thing is with that. So when you sell, to your point, when you close escrow on your down leg property that you're exchanging out of, you have a total of 180 days to close escrow on the new property, your up leg. And it's a hard 180. There's no like 181. You're going to have to pay tax. So it's a hard 180 days. And then within that, the first 45 days from when you close, you've got to identify the property that you're buying. So there's a lot of uncertainty with that, like, oh my gosh, the pressure. And then the people don't necessarily feel comfortable to lean in and do that. But what we do is before we even sell the down leg, we've already kind of identified where we're going and hopefully had that up leg under contract. So we can kind of package it and arrange the exchange, get all the timing lined up. So there's not a lot of like uncertainty and anxiety and exchange risk. So
yeah, you don't want to get to day 30, 15 days left, whatever, and still be looking to identify that property, because then you might just be doing a deal just to avoid tax. It might not be the right deal and might not make sense altogether.
Exactly. I mean, that's a great point. There's people that call us often and they're like, look, I got, 2 days left to identify, and I just need
2
something.
days. You've heard that
every week.
Oh man.
Every week.
Oh, that's great. Yeah. And especially now, what's the inventory level right now on these deals? It's got to be like nothing. Even in Southern California where, listen, California on almost every single study, whether it's U-Haul or United Van Lines or the U.S. Census, they've got the biggest migration out of any state. So even with everything going on in California, you're there, you tell me there's no inventory on multifamilies in SoCal?
It's
So
zero.
what's the future of California then?
I mean, that is a huge sign that a lot of people are very bullish on California. It's just everything there's inventory coming. I say zero. That's relatively speaking. There's a couple properties for sale. If anything's priced in line, there's getting multiple offers and it's probably going to a best and final. We as a team of 12 have zero available listings. We've never had that in our career. Everything's getting absorbed. We got one new property coming online this week and in Huntington Beach. But it just tells you that if you got something good, there's plenty of people out there, investors with a big appetite to own multifamily real estate in California.
So what is all this national drama around California? Is any of it legit? Is California losing wealth?
Oh, I would say, yeah. I mean, there's so much money that is migrating out of California, no doubt. There's so much money that has continued to keep doing that, and it's driving values on a lot of markets within the United States because there's so many California buyers out there used to California prices, and they're looking at everything, and it feels like it's on sale, relatively speaking. Now, certainly the market is just appreciated like crazy within the U.S., right? Um, but there's just within California, there's people trading out of certain locations and into new locations. So it's not like all of California is just like not working out. You just got a lot of people that are, a lot of landlords that are fed up with a lot of restrictions. There's more
Mm,
restrictions within LA City, the LA County, and not just the statewide level. So within Orange County, we're south of LA, so we've got a lot of money migrating to Orange County, where I'm headquartered here in Newport Beach. And then we've got a lot of money migrating to the Inland Empire, where a lot of people have moved to. So that's probably the best submarket within Southern California is the Inland Empire. I mean, double-digit rent growth. We've seen just practically zero vacancies within the marketplace. There's so much money that wants to be there because it's affordable, and people aren't having to work in LA as much. So they're working from home and
right.
doing remote and all that stuff. So I mean, I'm very long term bullish on California, but in the short term, just a lot of the rent restrictions, COVID restrictions, just caused a lot of businesses and investors to say, I can go make a great return than other places in the market. I don't need my money to be in California. So um, we were fearful of that in a sense. We were watching that, but then there was investors backfilling what they were selling here, and that created so many great opportunities for the local market.
How much will the growth of ADUs in California change maybe some values of some of these lower unit buildings?
I mean, that's a great new value add strategy is the ADUs, and they're popping up. We haven't sold yet. We've sold properties, a number of properties where people are ADUing units there, either killing a garage or two and converting into a unit, or doing a new construction in the back. But we haven't sold any yet. But we're excited to kind of broker those finished product. But that's a big value add within the marketplace. I mean, it's just going to add a smidge of units to the supply of the marketplace. So
Yeah.
I don't really think it's just, other than a value add component, it's not really going to help the housing shortage, unfortunately, that we're in within California.
So multifamily, obviously a great investment. It's been a great investment for a long time. We talked about the 1031 exchange benefit for investors. There's obviously other tax benefits that investor would get by investing in multifamily. And there's been a lot of talk the last couple of years that office properties are just going to be decimated. But if you're just paying attention since January 1, Facebook or Meta, they just bought a whole bunch of space in Austin, Texas. Adidas just bought up a whole bunch of space somewhere. I can't remember where. Google just spent like 1 billion on office space in London. So these big companies that have people working from home still are buying up a ton of office space. What do you think of office space as a long-term investment?
It's one I don't know. I've never owned office, but I can tell you the brokers that I know within the market that specialize in investment sales for office buildings are busy, busy, busy. They're doing a lot of deals. I would say if I had to guesstimate, your office leasing side of the business is probably a lot slower. I'm sure lease ups, there's less demand there just with COVID. People might not be growing, they might be contracting, but I'm sure there's still a lot of business to go around. But I think that would be probably down since the pandemic. But I'd love to buy an office building and do something creative. And I think there's a lot of people that believe in the office, side of it. Not everybody's just going to want to just work from home forever. I like a hybrid approach, but I think office is kind of being sort of, figured out again. You don't necessarily need as much space. I value like a great outdoor space on an office building. So
Sure.
I'm bullish on office. I'm more bullish on apartments, and it's what I know. So
Adidas was actually in a building, and I remember now, in LA, right next to walking distance to formerly Staples Center, now crypto.com
yeah,
arena. So, yeah, so over there in your neck of the woods, anyways. But these companies are buying enormous office spaces. So, I mean, they're the biggest companies, obviously, in the world. Maybe they're doing it for a tax benefit because, Meta, Facebook, they're like, hey, you can just keep working from home, and they go in Austin and they take up like all the available office space in some of the premier locations just a couple of weeks ago. So it's fascinating to me. I'm an office guy. Like, if I'm going to get work done, I got to be in the office. If I'm going to get a good workout in, I've got to be in the gym. Neither of those two things I can really do at a peak level at home. Of course, I can get on a business call at home or a FaceTime or something like that, obviously. But if I'm going to be in the zone for, a set period of time, I got to be in my element. I got to be in the office,
yep.
in the lab, as the cool kids say, Dan.
I like that. Yeah, I mean, there's just you look at some of these big tech companies, and they're moving, they're going where the jobs are. They're going to Texas, and there's a lot of them that come out of California. So I think they're just kind of there's a lot of relocations going on. So
Have you gone down and visited TF in Dallas yet?
I have not. I have not. That's on the to-do list, but I have not.
Yeah, you got to do that. Hopefully when I'm there so we can hang out. But Dallas is definitely, I've gone a few times this, since TF's gone down there 3 or 4 times.
Nice.
And to me, there's a lot of people going into a Dallas, Texas, an Austin, Texas. I'm sitting in South Florida right now. A lot of people coming into here and into this location, and the growth, it's incredible to watch.
Yeah, I could only imagine. I mean, I think we're on fire here, but you guys are just South Florida, Texas, Phoenix. Just you guys are like 2x the amount
Yeah.
of fire that's going on. You guys are just, I could only imagine.
All right, so leave anybody that's an agent that wants to invest in multifamily. I think it's the best retirement for somebody who's in real estate, buy real estate. Should they be thinking single family? Should they be thinking multifamily? Say they're a residential real estate agent. They want to start investing to build wealth for their future. Where should they start?
I would say it depends on where you live in your submarket. I'm from a small town in North Carolina, and there wasn't a lot of multifamily. So I bought single family. I wanted to own all these apartment buildings. There was just single family or like huge multifamily properties. There wasn't really anything in between.
Yeah.
Southern California, second to New York, it's probably got the highest concentration of like 2 to 15 unit apartment buildings in the United States. So if you live
Wow.
here, get a fourplex. If you live in a rural part of North Carolina, you're not going to get a fourplex. You're going to have to work with what the market can offer you. But I like single family, but I got in the multifamily game. That's why I drove out here and started over about 15 years ago in California. I wanted to get into a big market. I could specialize in selling doors. And I believe that was my path to building wealth. One thing I would add to that was a big game changer for me was not only investing in real estate, but it was because I was a real estate professional. And a lot of people probably viewing this are real estate professionals, but I was started doing the cost seg with the bonus depreciation year one on deals that I bought, and I saved a tremendous amount of tax. Certainly if I had to sell, I'm going to recapture that, but it was a great way to not only buy a really good investment, but then I was depreciating the asset and saving a ton of money on taxable income from my commissions. And I think doing those on an individual basis, investing in cost seg is great, but when you combine them together, it's a no brainer. I mean, that is where us as real estate professionals can get ahead and avoid paying a lot of tax. So if you haven't cost segregation on you could do it on a home. I think that might not pencil though. I think you need to get into some units to where it's a sizable investment. I don't want to speak saying that all single family homes are cheap, but where it would make
Not now.
sense. Yeah, not anymore. But I would
Yeah.
say, the Plex I cost seg, it was on the smaller scale, was 1,300,000, but I put 25% down. So it was about $375,000, $350,000 down. I did cost segregation. And what that is you're, instead of depreciating the apartment building over 27 and a half years, you could take certain components of the property and depreciate them over 5, 7, and 10 years. And with with the bonus depreciation, you can take all that out and accelerate it into year one. So I got almost a $400,000 write off year one on that deal. And
Nice.
so then I transferred that over to my broker's business and
Yes.
saved almost $200,000 in taxes.
Yeah. And as a real estate professional, you can transfer that over to that brokerage business.
Yes. And I started doing that in 2018. And, you got to be careful doing stuff like that. But I bought one little Plex every year, one little fourplex, saved up from brokers, bought a little fourplex, saved up, bought a little fourplex. And then I cost segged them all. And I basically got a free building out of it if you look at it from the savings. So
Awesome. Dan, I mean, I think people have learned so much that listen through this entire podcast, and I really appreciate you sharing. You're super knowledgeable. You got to go over to Multifamily SoCal on Instagram. Make sure that you're going to follow along the journey here over the next couple of years on Dan going to 100 units personally, but you're also sharing a whole bunch of stuff on what your team's doing, the deals you guys are putting together, some of your investors deals. So go make sure you hit them up on Instagram. You're by far the most knowledgeable in the multifamily space that I know. And I really just appreciate the way you break it down, make it make sense for us residential folks.
absolutely happy to help. Feel free to reach out anytime. I just want to make sure that we just put this information out there and share. I mean, it's just been this kind of archaic way of doing things for so long. Well, that's all changing,
Yeah.
right? I just want to be part of the change. So,
Awesome. Dan, really appreciate you.
all right. Thanks for having me on.
Thanks.